But of course, the biggest liquidity has to do with currencies. The global currencies market has had its own share of the impact of the coronavirus pandemic. However, there is little that could be done in terms of global trade, the financial markets, and even handling the COVID-19 itself without currencies. So for commodity-driven economies on the African continent, it's been a mixed bag for their currencies since the pandemic outbreak. Joining me live now is Uchenna Minnis. He's an FX trader and managing partner at BLUFX Nigeria. Good evening, Uche, and it's good to have you here on the program.
Good evening, Boston. Thank you for having me here.
Thank you very much. Let's get to talk about money. There's no time. How much damage has the virus pandemic done to the global currency market since the full outbreak in March?
It has quite given a huge, significant hit into the global market space in terms of currencies. However, ironically, when you look at the currencies from the developed market, given the initiation of central bank policy and also fiscal stimulus across board, you can see those currencies actually appreciating. The Australian dollar and the New Zealand dollar, for example, are also trading at their current level pre-COVID, and also you can see that in the Japanese yen and the Canadian dollars as a result. But if you come back to the developed markets, like frontier markets in African continent, you can see commodity-driven currencies like those from Nigeria, South Africa, Angola getting significantly hit as a result of their currency devaluation over time. And it could have been worse. We should also take into account that the US dollar has been seriously devalued over this period of this coronavirus pandemic. So if we had a strengthening US dollar, we would have seen more negative impact on currencies in the frontier markets space.
So what are the key drivers of currencies right now across the marketplace? What's driving the currency play?
I think it's a mixture of a plethora of things. We will never let that slide. The coronavirus in itself, that actually has to be factored into in terms of market participants trying to price in variables in terms of risk. We also need to look at what central banks, global central banks are doing, either in unison or coordinated coalition effort to sort of ease conditions. You can also look at what government agencies, fiscal policies are being implemented across board. That in itself, the plethora of these things, the combining effect of those things will sort of give you like that aggregate risk-off or risk-on sentiment, and that in itself would see to the immediate, should I say, driving variable of currencies in the near term.
Uche, there is hardly nothing we can do on planet Earth without currencies. So whether you're trading even the currencies market itself, or you're trading equities, or you're going for the mining resources, whatever it is you need, currency. So what are traders looking out for during this pandemic period? You need trade as well. The brickbat between Washington and Beijing, between United States and Huawei, or you're talking about the former allies in Europe.
Right. I think the focus is always going to be the US dollar. We know the US dollar is a world reserve currency, and that is not just a broad term. It's actually technically the world reserve currencies as commodities and asset classes, and also whatever trades that are being that occur between countries are actually being settled in the US dollar and priced in the US dollar. So in effect, market participants, traders, investors, speculators as well would always look at what the US dollar is looking to do, really, to determine what the next possible move would be in terms of their asset class or their portfolio dynamics, really. But if you look at it right now, the US dollar is actually has lost since the beginning of the year about 5.9% thereabout. And if that continue to be the case, you will have a depreciating US dollar valuation. But I have a worry, and my worry is that there is still that strong US economy and the rest of the world growth differential. And if that continues to be the case, what we'll get to see is that we start seeing foreign investors driving their portfolio and capital inflow into the US as a result of looking to search for yield or positive yield for people looking for the ROI in terms of or their portfolio that they're looking to work with. But when you continue to see that, then it becomes counterproductive given the aggressive printing of the Federal Reserve and the unintended consequences of the appreciation of the US dollar. That is not going to be good for the frontier market space, given the fact that a lot of our debts are actually priced in the US dollar.
So where is carry trade here in this conversation, and which currency is my best bet here?
So I think right now, given what is currently happening, we can see that a lot of those safe haven-like currency are actually doing well. That's the Japanese yen, the Swiss franc. The euro has actually started to form like some level of safe haven, given the fact that it has successfully, should I say, capped the increment of its own coronavirus cases. So you can see the euro appreciating in the near term. So those currencies would look very, very, very palatable going forward if things continue to remain the same and we don't have another, should I say, phase of national or global shutdown.
When we talk about commodities for sub-Saharan Africa, countries that produce gas and crude oil readily come to mind. So you talk about Nigeria, Angola, Ghana is stepping into that market a little bit. Kenyans are still looking for a bit of this. South Africa is looking for gas offshore. Mozambique is still investing in major gas. So a currency becomes a very big play here. So is there so much correlation between currencies, the price of oil, and what happens to the economies of these few countries I mentioned?
Yeah, there is strong correlation. The demand, basically, we can see the demand, global demand going almost, not significantly lower since this pandemic hit the world, and that in itself has caused commodities and trade to sort of drop significantly. And given the effect or the reliance of these economies on those trade, like for Nigeria, for example, now, you can see the effect on our FX and how our currency really is valued. They have that, should I say, connecting effect, given the demand, the level of sales as a result of the demand, and now the valuation of the currency, giving investors sort of drive and look at the dependence and the activity as regards to selling, and that would affect the valuation of the local currency in these economies.
Uchenna Minnis, managing partner and FX trader at BLUFX Nigeria. Thank you very much for coming this evening. We appreciate your time.
Thank you very much for having me in Boston.